Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of Euro, Dollar, Euro, USD after FOMC. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, FOMC is over, and after FOMC, we saw selling on the chart of DXY. Market was hoping for rate hike interest, and yes, market got 25 basis points rate hike, but still dollar index fell. If you watch my previous videos, then we discuss about the buy the rumor, sell the news. Remember, I told you guys that market, there's a famous quote in the market: buy the rumor, sell the news, and we saw a classic example of it. DXY was going up because DXY was hoping for rate hike interest, but yes, when the news came out, we saw sell-off on the chart of dollar index, and right now DXY is standing at 100.85. You can see dollar falls after Fed rate hike. Dollar fell against a basket of its peers on Wednesday after the Federal Reserve raised interest rate hike by a quarter of a percentage point, citing still elevated inflation as a rationale for what is now the highest US central bank policy rate in 16 years. Dollar falls after Chair Powell comments. The dollar index edged lower to below 101 on Wednesday after Chair Powell said that monetary policy is currently restrictive and clarified that no decision to raise borrowing costs further has been made yet. DXY is standing at 100.85 right now, and DXY is also standing at the previous support. If you remember, then we discussed about 100.80 in our previous videos, because 100.80 was the last support. Okay, and right now market is struggling around this level. If DXY breaks 100.60, let me write again. Okay, if DXY breaks 100.60, then we can expect the downside to continue and we can plan our trades accordingly. On the other hand, to continue the upside, DXY needs to cross 101.25. If DXY crosses 101.25, then it will be heading towards 101.50, 101.60. But right now DXY is trying its best, okay, to settle. So let the market settle. If you already have an ongoing position on any US dollar pair, it can be AUD USD, NZD USD, gold, you can be on the trade, no need to exit. Let the market settle. Once the market settles down, and if you see market moving below 100.60, then you can plan your trades accordingly. Or if you see that market is trying to recover, DXY is going above 101.25, then you can plan your trades accordingly. And my dear friends, we have a long list of events also coming up during the US session, so please be careful. As I always say, beginners, new traders, traders with low capital, do not gamble with your hard-earned money during the news. Market will give you plenty of opportunities to make money, so you don't need to gamble. Be a trader, not a gambler. And be careful. Okay, so this is all about DXY. Now let's talk about the chart of Euro USD. So Euro USD is right now, okay, standing at 1.1100. Okay, this is the current market price here. If you have a buy position, be on the trade. If you have a sell position, then also be on the trade. Okay, but if you're looking for fresh position, then please do not enter right now, because your risk to reward ratio will not match. If if Euro USD crosses 1.1120 during the day, especially before the US session, if you see Euro USD crossing 1.1120 level, and if you see that the market is also accompanied by volume, then you can look for a buy position, and your next target will be 1.1147. Okay, so if you take a buy above 1.1120, 1.1140 will be your next target. And to continue the upside, to have a clean uptrend market, Euro USD needs to break 1.1150. If you're a swing trader, you can look for a buy position above this level, because if DXY crosses this level, then the road is quite clear. Okay, and if you're wondering why we discuss about this level, then let me show you. See, here we have taken help of Fibonacci. Here you can see right now Fibonacci is struggling around Fibo 38.2% retracement level. Previously Fibo 23.6% also worked nicely. So it gives us a clear-cut confirmation that our Fibo setup is valid. Okay, as a result, we are hoping that if Euro USD breaks this level here, then it will be heading towards this level here, and we can look for a buy above 1.1120 and 1.114745 will be our next target. Okay, and if market reverses from 1.1147 1.1150 area, you can also look for a quick selling opportunity as well. But if you're a swing trader, if you're looking for a long position for next few days, you can look for a buy above 1.1150 only. Clear? Similarly, if the fiber comes for some retracement, you need to observe the volatility of the market first, because as I have already shown you that today we have a long list of events, so obviously market will be extremely volatile during the news. And as we all know, when news dominate the market, when the fundamentals dominate the market, the technicals do not work. And as a trader, especially as a retail trader, you need to understand when to trust the fundamentals and when to trust the technicals. So before the US session, if you see market is going down, observe the volatility of the market. If you see the market is low volatile, then you can expect 1.1069 to work as the first support, or around 1.1068. It can be 1.1070 also. Around this area we have the first support. If the volatility of the market is low, you can expect a quick bounce from here. If market takes support and bounces, you can go for a buy. But on the other hand, if you see, then more or less the volatility of the market is high. If you see market going down with these type of candles, then this may not work, because volatility decides. So if you see market is volatile, then wait for the market to hit 1.1058. It can be 1.1055, it can be 1.105660 also. Around this area we have the second support. If market takes support and bounces, we can look for a buy position. These are the two retracement level before the US session where we can look for some support. If market comes for support, obviously our risk to reward ratio will be in our favor, and definitely we can go for a buy. Buy at retracement is obviously the best trading strategy, but yes, market will have to come for retracement, isn't it? If market doesn't come for retracement, we cannot force the market. Okay, in that case you can look for a buy above this level as well. But right now in this present level, okay, try to avoid any position, because your risk to reward ratio will not match. But if you are already holding a buy or sell position, you can be on the trade, because because already you are on it, and I don't know where you have entered. Anyways, this is my analysis. I can be wrong as well, so please follow proper risk management and do not gamble with your hard-earned money. Bye bye, take care, and be careful during the news. Okay, let the market settle down.